because China knew on the backside, because China really could shut down our economy simply by limiting our access to critical minerals. Want to live in the modern world, you got to either grow it or mine it. That we're heading into the commodities wars. Going to be the fact that the rest of the world said, we're sick and tired of your crap. We're going to call you on your crap. We're going to build our own markets, and we're going to steal your silver.
Welcome, everyone. I'm your host, Tiger Stacker, and today I have a really awesome interview with Rob Kientz. Rob has been in financial market analysis for 16 years or maybe more. He is the owner of the YouTube channel, The Freedom Report. He is part of Citizens for Sound Money. He is also involved in a gold and silver business. I've listened to Rob on multiple channels and I've enjoyed his insight. He has a good strong hold on what's going on out there in the real world. I learned a lot from him when I watch him. You will too. So without further ado, I want to welcome my guest, Rob Kientz. Welcome to the channel, Rob.
Hey, thank you for having me on. It's quite the honor.
It's my pleasure. Rob, like many people, I love origin stories. How did you get involved in finances, precious metals, and in a gold and silver business?
Well, it started during the Great Recession, I guess, when I ended my IT career. I've been in IT for 30 years. Started off doing administration and then did audit and consulting and then ended up in cybersecurity, which is what I have my master's in. And I ended that career probably 5 or 6 years ago. But my journey into economics started sort of along the way. The only time I was ever really laid off in my life was February 1st of 2009, which was, as far as the markets were concerned, the bottom or the worst day of the Great Recession. After that, February 2nd, it started recovering slowly but surely. And recovering, I don't mean it's healthy. I just mean the government pumped a lot of money into it. But I got laid off on February 1st. And, I had worked hard. I had a college degree. I was an honor student. I was working for Ernst & Young in Big Four public accounting as an auditor, mostly a technical auditor, but did some finance, accounting, business process stuff. And I got really pissed off, to be honest, because I'd followed all the rules and I got laid off. And not only that, but I got laid off after making my company a ton of money. And I'm like, wait, this doesn't make sense. And we had just had our son, our second, in December previous. So he was only less than 2 months old. And we had a home, and thank goodness my wife was working, but it put quite the financial strain. And as a man, I looked at it and say, I did everything right. I graduated with honors from college. I had good jobs, kept my nose clean, had no criminal record, all that kind of stuff. And you think that, the world's supposed to treat you a certain way. And then you get a rude awakening. It was good because it awakened me what's going on. It completely changed the trajectory of my career, what I'm doing. And in the long run, I've realized it was a blessing, although at the time I didn't feel that way. Well, prior to getting laid off, the summer before, as many remember, is when the mortgage crisis started to become public and people started freaking out about how, essentially how it could, crash the world economy, stuff like that. You had Lehman, you had a bunch of stuff going on. And underneath all that mortgage mess, there was a silver mess too. And there were like short positioning on COMEX, but that got swept under the rug. Everybody was talking about the more popular mortgage market. And the funny thing is that summer before I got laid off and before, the height of the financial crisis, I was working for a mortgage originator in Fort Worth. It was part of one of these very big global banks. It was a division of, and I'd done their technical audit the year prior. I was looking at technical controls, access controls, that kind of thing for them on a standard audit, which EY got hired to do. And then that was the year before. And then probably 7 or 8 months later, I get a call into my partner's office at EY. And I sit down and there's a senior manager I'd never worked before because he was on the business process team, different team than me. And they sat down and said, Rob, we got a project for you. Now, typically during the summer, I would go off to Europe and around the world doing SAS 70 engagements, which is a third-party auditor at a station now called SA 16. Don't need to know that. But I was off doing those types of client work and I had repeating clients. So I'm like, why are you pulling me off my repeating clients? Because you didn't want to get pulled off onto something different because you didn't know if you get back into your work the next year. Just when you're working in the big four, you want to stay on the big projects. So anyway, I was a little bit concerned and said, well, we got this mortgage processor. They bought 52,000 loans from a defunct mortgage servicer, and we need to go out there and help them figure it out. And I'm like, okay, I've never done mortgage stuff in my life. I mean, I'd been across a lot of industries. This is one I hadn't touched. And I had some financial education at the time because I've been educating myself, but I didn't really know the ins and outs. Anyway, long story short, I saw we had 52,000 loans. It was a Novastar portfolio. They got bought out by a division of this global bank. And we went in and actually serviced and fixed the loans. And EY had such great resources around data analytics teams and really smart people that within a month, we basically had trained ourselves on the basics. And within 2 to 3 months, we had become experts because we knew the portfolio better than the servicer knew it. Because remember, they got it and they were trying to figure it out. And even though they had some background experience, they were a small team. Well, we had a team of really intelligent people with data analytics, and we were able to kind of figure it out quick, and we started fixing it. But one thing we did was take a data analytics approach and look at the portfolio, and they were all adjustable rate mortgages. This is the crap that went into the mortgage-backed securities that all collapsed and had all those issues. And the ratings agencies had misrated and all that kind of stuff. And there's a good movie on this called The Big Short, if anybody wants to know. Watch that movie. It's an excellent depiction of how the mortgage market blew up in 2008 and 2009. Anyway, long story short, I knew where the bodies were buried in the mortgage industry. I saw it before everyone else. So that when Lehman happened, I was back on my normal clients doing my normal attestation work for EY. And I didn't know about Lehman, but it didn't surprise me when it came out because I just worked on a project where 52,000 loans were so screwed up. And if you multiply that out into the millions and millions that we had, then you began to see the problem. And you begin to see all the financialization of the mortgage market, the risk taking to make profit and return, and how unfettered desire for pure return in a fiat monetary system can lead to these types of bubbles. I didn't understand that all at the time. I had to go and study Austrian economics. But the first book that I picked up right after I got laid off on February 1st, because I had all sorts of time on my hands, is The Creature from Jekyll Island by J. Edward Griffin, which taught me a lot about the financial system. And then I found the Mises Intitute at Mises.org. That's MISES.org for anybody's interested. And I started reading books that confirmed what classically trained, tenured economics professor, degreed professor that agreed with what J. Edward Griffin had written in a more of an academic format. So I was able to confirm his work, and I thought, holy crap. Like, I never knew this because I had a business degree. My bachelor's was MIS, which I had my business classes and my tech classes. But I had finance, accounting, economics, and none of this made any sense. So anyway, long journey. I decided to write a book. I worked for a Forex broker and got a Series 3 license to learn how those markets worked. And then when I could get a job back in industry about a year later, I did. And I went back to audit and consulting because that's where I spent all my time. But in the meantime, I'd educated myself on a lot of things. I got in like a Series 3, 63, various working part-time jobs for these different companies trying to learn finance. And I learned a lot about a lot of these markets. I traded and took licensure in commodities and in Forex, which is currencies. I did it in life insurance, stock market, commodities, all this kind of stuff. And so I just had more of an academic background in it and a little bit of practice in it working for companies. Anyway, I went back to my normal career. And the first company I went to work for was a mortgage servicer. And it was American Home Mortgage Servicing, which is a Wilbur Ross-owned company, which itself was a rescue of two subprime lending lenders into one. And I got to see the mortgage market again in the aftermath of the collapse and the TARP programs and all that crap the government tried to do, which was a total failure. And I got to audit. And when I went to audit there, I said, I don't want to do just technical. I want to do technical and mortgage and accounting. I want all. So I would go to the mainframe system and pull reports, and I audited end to end. Real estate owned, which is REO. If you've ever been in mortgage servicing, the REO departments is when you have to take it back. You have to foreclose or take the property back. Bankruptcy process, I saw all of these processes. I really educated myself on how that part of the market worked. As an auditor, having full access, permission for the board of directors to see anything in the company I wanted, within reason. But I got to see a lot of it. And, through all of that, I started to write a book when I was there at OMSI. And it took me about 7-8 months, and then it took another 3-4 months to get edited. I'd never written anything, and I published the book, Drop Shadow, The Truth About the Economy and How You Can Survive the Coming Economic Collapse. And that book's now 16 years old, and I need to write another one. I haven't done it yet, but that was me writing a tabletop book or a teaching book to the average person on how the economy really works and what I'd found out from the inside and through my training and through my own solid year of analysis and deep data diving, because I was a data guy and I understood how to audit. So I just went and audited the economy, and I went and audited all these things to try to figure out what the hell was going on. And then I got some classical academic training, and then I worked in the field long enough, in different financial areas to really get a feel for how this stuff worked. And as an auditor, you have access to an incredible amount of information. So I didn't need to work a year in bankruptcy to understand the bankruptcy process. I could do a project over 6 weeks and understand it better than a lot of the employees there did because I had access to everything, big data analysis. So I started to understand that process. And anyway, long story short, this is going really long, sorry. But I became a syndicator writer, Seeking Alpha syndicated, Yahoo Finance, and other places. Then I started writing on a lot of different areas. I wrote on telecom because right after American Home Mortgage Servicing, I went back into telecom, where I spent a lot of years for Verizon and another company I worked for. Another 20 billion telecom. So I had experience in tech, I had experience in finance. And the cool thing is I can use my tech and finance experience now to go deep data dive on stuff and then, but explain it in a way people can understand. Because when I wrote my audit reports or I did my consulting for these Fortune 500 companies, helping them out with business problems, I had to go to the CEO level or the VP level or the board of director level and explain in plain terms all these complex subjects, because you can't expect the CEO to know the details of every area of his organization. He may have grown up in it, but he's really looking at it from a top-down risk perspective. So what I do on my channel is I take these complex financial concepts and I break them down into bite-sized chunks people can understand and put it in layman's terms so that people understand, try to educate them on what's going on. So again, sorry that answer was so long, but that's my genesis over the last 16 years over why I got into this. And now I don't work in tech anymore. For the last 4 or 5 years, I've had my own company. I work for a bullion provider here in the U.S. I've done a lot of nonprofit work, Citizens for Sound Money, in legislative work, sitting in the Senate and the House in Florida and talking to a lot of their government offices, including the governor's office, about sound money and getting that legislation passed. And I'll be doing a lot more in Texas later this year and in 2027 when Texas is back in session. They're every other year doing the same thing. There is gold legislation, there is legal tender, but we want to tweak it and improve it a little bit. So I'll be working there. We also helped Missouri pass their gold legal tender law. Patrick Holland, Missouri Freedom Initiative, who's done a fabulous job out there for years. So I've gotten involved in a lot of ways in this space, and I really love this space. It's a different space than tech and cyber, but I'm able to use my skills, hopefully helping people out and educating them.
From watching you on other channels and watching your channel, I am accustomed to your teaching style, someone who enjoys teaching. And your YouTube channel playlist has a 3-part series on precious metals. Mm-hmm. It's especially good for newbies. You have basically 3 separate videos in that playlist. First one, mining. Second one, prices, derivatives, and manipulation. And the third, fundamental technical analysis, retail prices. Would you care to elaborate on that playlist, especially for the newbies?
Yeah, so that playlist I created, at the end of last year because, as you've done this for a while, you kind of change your methods. And you also want stuff that will last over time. People can watch my weekly videos and it's great. But I wanted to leave something for people that kind of stood there, that was a resource for them, that was free, hopefully easily accessible. Just go to my homepage on the Freedom Report and go down to the first playlist. It's the masterclass, which is completely free. I didn't put it on these third-party websites and charge money for it. I put it on my channel for anybody to view. You don't have to be a member. You just click the button on the videos. But really, it's designed to take people end to end through the supply chain. When I first started writing, I ended up doing a lot of work with mining companies. Still do, by the way. Still have a lot of friends in the mining space. I had a recent video on my channel with a couple of guys involved in mining. One is a former CFO, VP of a mining company, also runs a capital company, helping these mining companies get listed and get formed. And then with Paul Harris, a friend of mine, the first one, Paul Harris, a friend of mine that writes, the senior editor for America's Mining Journal, Kitco senior mining editor. He also works for Rick Rule as well, doing some work. So people that know the Rick Rule will respect Paul Harris's work. Paul Harris has a long history in this. And I did that, it was probably last week, to talk about the mining end of things and the fact that it's resurging and if people are interested in getting involved. And we talked about a lot of the common concerns around nationalization, investment, the U.S., making silver critical, all that stuff. Well, anyway, so that video is out there, but that just talks about it at a point in time. The 3-part series, and the first part on mining is really to educate people on how it all works. And there's a ton of risk in this sector, depending on where you want to invest. If you're investing in the earliest stage of it, you have the most risk, but you have the most potential for return. But people need to understand that before they throw money at it. And then if they lose it and say, what happened? So I want to do a whole video on that. It's the longest video in the series, and I break down and go through a lot of the detail. The second part is really, it's more on, let me actually go to my homepage, and because I broke one part into 2 parts. So the part 2 is pricing, derivatives, and manipulation. I have a long history in uncovering manipulation. My friend and I uncovered what we think and still believe to this day, because we looked at the financial statements and have real numbers, that the Perth Mint was running some sort of reapplication scam over customer gold and silver to the tune of 929 Australian million dollars, almost $1 billion. And we think it may be potentially the biggest gold market scandal in history. That's 4 years ago on my channel. You can watch those videos. And we back it up with stuff that they published. So we're not accusing them of anything that isn't backed by financial analysis and numbers. He was a CFA. I was an auditor, and also I interviewed the guy that was in charge of the investigations for the CFTC at Silver Symposium a few years ago. All of that discussion and some of that content's in that second video. So I tell you how pricing really works. I tell you how the derivatives work, meaning the COMEX, the London, Shanghai, all that kind of stuff, how the prices are determined. And I teach you about where it's manipulated, who's manipulating, because every market's manipulated. It doesn't mean you can't be successful in the market. You just need to understand that if you're getting into it. And the third price is just retail prices and price analysis. So really, I got more into fundamentals and technical analysis. Now, that third part is the most popular part from the standpoint of that's what most people look for. They just want to dive in the market and invest. I personally think the first two parts are the most important because they teach you how to invest and how to be careful in that world and understand some of the common risks. And I can't, in a 3-part series, cover everything, but I can give you a ton of information in a short period of time, which over about 3.5 hours of your Saturday or Sunday, if you want to sit down and watch it all together, can make you 100 times more knowledgeable on that market and lead you into thoughts about where you may not only want to invest in it, but where you may want to teach yourself more and learn more. So really, it's sort of a jumping off point teaching tool for people to, if they're interested in the market, view that and then say, holy crap, I want to go learn more about this. And then building your own competencies in the market, not only for investing, but just for knowledge. And within all of that context is our economic principles, Austrian economic principles for sound money, finances, and stuff like that. So there are a lot of different reasons why that series I think is going to hit with people. And it's out there at no charge. I'm not a guy who's going to charge for that kind of stuff. I'm here to educate people, and I make my money the other way by running businesses. So really, I've tried to make most of my content for free for the most part. Maybe I'll go back to doing some paid content, but my purpose is to teach as many people as I can. And because we're getting into this big bull market, I mean, gold and silver prices are down at the time we're recording this. It's a mid-cycle correction, not even a big one. But we're in this massive third leg of this bull market running since the year 2000, in which gold has beaten, the snot out of the stock market indices, real estate, all that stuff. And people don't know that, but people are being attracted to it because silver has quadrupled in 2 years and gold's doubled in 2 years, more than doubled. And so people are seeing the numbers and like, oh, I need to invest in gold and silver. And it's not quite mainstream, but it's getting there. So in the light of that, we're going to have a lot of new people come on. And so I wanted to do that series as a way to give people at least some foundation in what they're looking at before they jump in.
I got involved in some stocks for junior miners and certain phrases such as the inferred and the indicated categories. I couldn't get my head wrapped around until I watched your 3-part series. Now I'm a little more knowledgeable, so I want to thank you for that.
Sure.
With China controlling 60 to 70% of global supply and approximately the same percentage in refining, is the U.S. trying to get new mines in silver and gold and other precious metals and industrial metals started up so as to combat the stranglehold China has?
Yeah, so China has positioned themselves through the Belt and Road Initiative and through their own investment in their own infrastructure to be sort of the commodity capital of the world in terms of refining and also mining. They're, I think, the second largest silver producer in the world. They're a major gold producer. They produce rare earths. They produce oil. They produce, fluorspar and all of these critical minerals and base minerals. And Russia actually has the most reserves, and China's in a partnership with Russia. But China does a lot of the refining. They do something still like 92, 95% of rare earth refining. It's down from 97, but it's still the majority. They do a lot of the gold and silver refining, much like the Swiss do. China's right up there with them. So they have somewhat control over the market because they can choose to refine for certain countries or companies. And they also use that refined capacity to get themselves ahead of these markets and better prices in all these various commodities. Because China knew on the backside of the fiat collapse, the fiat money collapse, that the commodities market would boom, that gold would be a large part of the financial system, that silver was important for everything in the world, basically, industrial and monetary, and that they knew that they wanted to be a part of building this massive trade network, which would propel them sort of to the front and would help them build their middle class economy because they want to fully industrialize and get into the levels of the economy that the United States has. And so this is very intelligent plan. And China, to some extent, has a stranglehold in some of these critical minerals. And the U.S. has finally woken up this year under the Trump administration and addressing that. There's a $8.5 billion deal with Australia for rare earths, supply, refining, and other critical minerals. $4 billion allocated for silver specifically. You've seen what they've done with oil going to Venezuela. You've seen their investment with the sovereign wealth fund, they're investing in gold and silver bullion, but they're also investing in the miners to make sure that the government can capitalize on the asset side of the balance sheet, as they've said, Bessent and Lutnick and Trump, much like other countries have done. China, Russia, all these guys have sovereign wealth funds. The United States finally woke up and said, maybe we should invest in our own economy, the government. Which you have to be careful. You just want to make sure they invest, but they don't influence overtly. You want, capitalism to remain. But having the government invest in some of our economy is not a bad thing, especially since they have the money printing. The dollar is going to fail, but putting some money into that so that we can rebuild on the flip side, that's important. And the United States is finally starting to catch up. They've invested in miners. They're going to buy output from miners. I've heard a little bit of rumor about thorium because you only have so much uranium for nuclear, because nuclear is going to be one of the most important grid energy sources. So a lot of the things that have been dormant that the U.S. either has on soil or has the capability to process and refine, at least has the intellectual knowledge, the U.S. is finally starting to wake up. So we're sort of in that stage of the economy where the U.S. is waking up. And that needs to happen because China really could shut down our economy simply by limiting our access to critical minerals processed out of their facilities. Because what it would do is if China wanted to limit it, everybody in the world would be scrambling for what's left. Prices would spike and not everybody would get what they needed. And China could really, if they wanted to, with the push of a button or, a legislative act, really throw the world into a tizzy. They have a lot of control over their world economy. And it's not just their manufacturing base. It's their control over key resources that we need in our economy for the stuff that we use. So the U.S., Australia, some of these Western nations are starting to finally wake up. Europe is still asleep at the wheel. They're bringing back some coal and nuclear only after it almost completely collapsed, the European economy. But they're still, run by technocrats and socialists who believe that, you can print money to oblivion and you don't need to mine anything. It'll just show up, and they don't really have a real focus on how supply chains and economy works. But, Australia, the United States, to a lesser extent, Canada are waking up. Mexico is waking up. A few years ago, Mexico wanted to ban open pit mining, and the leftist female president there changed her tune on that recently because mining is such a huge part of Mexican economy and Mexico's worried about getting resources. So when push came to shove, the leftist president said, well, I guess we need to reinvigorate mining here in Mexico. So I don't care what your philosophy is. If you want to live in the modern world, you got to either grow it or mine it, or else you don't have it. So I do think there's a move in the Western world to sort of recover mineral independence, both in mining and processing. But we're a long way from being there, which will be an opportunity for investors, but it's a little bit scary in terms of economic terms because it takes years to build all that up. It takes years to do the permitting, the mine building. It's going to take billions upon billions upon billions of dollars of CapEx spend and OpEx spend, ongoing spend. That is going to have to come from somewhere. So mining, investors have to get back into the mining space. The U.S. government's going to have to goose it. There's no way around it. We don't want the U.S. government running our economy, but if we want to get minerals in the economy, they're going to have to get involved because you just waited too damn long. And so I think, that's what's coming to the mining industry. I think the mining industry boom, some of the mining stocks have done very well, but the big boom has not come yet. And it's not just going to be gold and silver. We're seeing record prices in copper. We're seeing the resurgence of lithium, fluorspar, scandium, vanadium, all these things, even base metals are doing very, very well. So we're in early stages of a commodity boom. I don't think that's going to go in a straight line because we're going to have a world recession, which is going to dent that commodity boom. But much like the precious metals boom, the biggest piece of it will come after currency failures and stock market failures. The commodity boom as a whole is going to come after the world recession period, which will probably go for a few years. So you're going to have an upstage, kind of a pullback, and then an explosion stage. I would guess for at least 10 years as the world figures out how to manage its resources.
Well, that makes a lot of sense. On the other side of the coin, as an example of my prior question, I bring attention to Argentina.
Mhm.
Approximately 2 years ago, I noticed on Yankee Stacking's channel an introduction to a lithium mine that was for possible investors. At the time, I did not wish to get involved with that, not only because I was really new to stacking, but also my investigation showed China had a really good stronghold in Argentina, so I didn't want to put money into a foreign country that was controlled by China. Now, I wish I had. Why? Because I was recently introduced to Argenta Silver, which is a pure silver mine in Argentina. And the U.S. is pouring a lot of money into Argentina. And more recently, I was exposed to Vanguard Mining, which has mines in Argentina, other places as well, which is producing copper, gold, lithium, uranium, molybdenum, and platinum. It seems that Argentina either has or is becoming more U.S. friendly. So far, I'm not seeing any good return on the two investments I've mentioned just a little bit ago, but it's early for me. However, I have seen a better return on things like Vizsla Silver, U.S. Gold Mining, First Majestic Silver, and Dolly Varden Silver. So what's your take on Argentina mines and even the other ones that are not in Argentina that I have mentioned?
Yeah, I've visited mines. If people go to that first part of the free precious metals masterclass series on my YouTube channel, they'll see that I talk about my visits to mines. And then if you do that follow-up video with Jerry Huang and Paul Harris, who are mining experts and analysts and have a lot of exposure to the world, because most of my exposure was really Canada, United States, Mexico, where I visited. They've been more around the world as well and are involved in financing, prospecting, the whole nine yards, analysis. If you put those two together and go back and look at my mining stock videos over the years, there's a lot of information there. But the main thing is what the experts are telling me is that you can't just mine in what are considered super safe jurisdictions of Canada, the US, and Australia. You're going to have to go to Latin America. People are going to have to go to China. You're going to have to go to Russia. You're going to have to go to Eastern and Western Europe. And the next big boom is coming to Africa. Africa and the Middle East have such untapped mineral resources. I'm not just talking oil. I'm talking like freaking everything. And China and the US are vying for Africa and the Middle East, much like they're vying for South America, hence the Venezuela conflict. There is, I said 6 years ago at a Money Metals and Mines virtual conference as a speaker that we're heading into the commodities wars about 5.5, 6 years ago. That's true. And a lot of stuff I predicted has come true. And of course, it's, much more robust than even I thought. But the world is geopolitically realigning around resources. Places like Peru and Argentina and Kazakhstan and Kenya and Egypt and South Africa and all of these, what most Americans or Westerners consider far-flung places, are where the next mineral boom is going to bring the highest returns. And so if people are interested in investing in the mining stocks, first of all, do your own research. I'm not a financial advisor, please. Hence the videos, but also do additional research to validate even what I've brought to the table and what my experts have brought to the table. Do your research. These are risky investments, but I feel like they're going to offer asymmetrical returns in many cases because of the need for these resources and the underdeveloped nature of the infrastructure in places like Argentina. And Argentina is a great country. They were once, I think, the largest economy in South America. Unfortunately, socialism has kind of dragged them down and they have fiscal problems, but they're recovering. They have a libertarian president who's done a lot for non-economic issues, and he's struggling with some of the economic stuff only because they're in such bad shape. But one of the ways in which Argentina is going to recover is through its mining sector and through its resource sector, its rich resources. Great beef market, okay, cows and things, advanced, high quality agriculture and resources. So they grow it and they mine it, which is going to make Argentina potentially a power player in South America going forward during the commodity boom and the resource boom and the ag boom, assuming, they can keep people in office who allow those industries to blossom and bring that wealth back to the people, bring that national natural wealth back to the people. So Argentina, I was just in Argentina last year, we talked with a couple of officials that work for President Milei, and we talked with some locals on the ground and some industry leaders, people that own businesses that are working in ag and mining, people that work in the money markets, both the, what you call the legitimate money market and then the gray or black market that people have to survive because that currency has such issues. we got a lot of boots on the ground intel there, and I think Argentina could be a potentially good play. Just, study the risk, but I think long-term, a lot of these places that traditionally haven't been looked at as the leaders for Western capital are going to get it because they simply, the returns and the development opportunities and the unmistakable, unstoppable need for these resources, what you can grow and what you can mine, are going to become more important to the world. So places like Argentina, I think, are going to be really good places to invest. And one thing I talked about a few years ago when I wrote for Seeking Alpha, it may have been 8, 9 years, 10 years ago. I don't even remember, maybe more. I wrote an article on Chile in South America. And I said, Chile has better investment opportunities than China or India because of some of their markets. And it ended up getting picked as an editor's choice article by the Seeking Alpha editors. And a lot of the investments I talked about did very well. But it was time to write that story in Chile because of what they had done from a government and an economics perspective and how they were flourishing. And Chile has all the biomes, and it has many different things that it can grow and mine and develop. And they did very well. And I think more of that is coming to South America. It's taken some time for South America to kind of get that investment. We've done coverage for companies in Colombia, Peru. Paul Harris runs the Americas Mining Journal. He's lived down there for at least the last 10 years. We went to Mexico to tour Guanajuato silver together, along with David Erfle, who writes Mining Stock Junkie, about 4 years ago. I have a video on my channel 4 years ago, free, to show you the actual mine tour and visit and driving into the mine and the drilling. And if people want to watch that video, it shows you how the sausage is made, so to speak. But I think it's not just Mexico anymore. It's going to be a lot of Central and South America. And I think there are going to be huge investment opportunities down there.
So I'm just tickled that I actually hit the nail on the head with that one. With you having all the experience, it was really reassuring to know that my lower level of experience is heading me in the correct direction. Thank you. In the 4 to 5 years that I've been stacking, I've experienced a little bit of the silver squeeze, which at that time, I did not pay much attention to it. I just kept stacking as I had money and time. But this silver squeeze feels significantly different. This one feels real. A physical silver squeeze, not just paper only. China, India, Russia, and others are standing for physical delivery, which I think is the first time for many people to experience, myself included. The people who were playing the paper silver markets got caught with their pants down. What's your take on this?
Oh, yeah. I mean, the banks and stuff like that, I just did a tweet on that. For 16 years, I was one of the first to talk about manipulation. If you go back to my Seeking Alpha articles, Seeking Alpha is considered mainstream. It is a collection of independent thoughts on the economy from thousands of people across the world. But we're talking hedge fund managers, analysts, people that are doers, people that are analysts, people that are heavy investors and experts. So Seeking Alpha has a ton of collective knowledge. And the term Seeking Alpha is they're seeking that outsized return. That's called alpha. And they focus most on stocks, but they do gold, silver, bonds, all that kind of stuff. In 2000, I think late 2009, early 2010, mid 2010, when I started writing for them after the book, that's how I got to writing for them. Because proof of concept, I'd written a book, I could write, they let me on. Why, I don't know, didn't have public profile. But first article was gold is money, not an asset. And I was talking about gold being sound money. The second through these 6 articles in a 5-part series, I wrote about suppression of the metals. That got picked up by Bill and Adrian over at GATA, Gold Antitrust Action Committee, GATA.org. And they wrote a summary of it in 2010 that I was the first person that was able to get the suppression story into mainstream media, mainstream financial media. And why the editors at Seeking Alpha allowed me to do this to this day, I do not know. I think that's a God thing. I think it was needed to come out. And, like I said, I've interviewed people that do for the CFTC, that did the analysis. They did the analysis of the JP Morgan before they got fined $920 million for manipulating treasuries and silver. Mm-hmm. So I have a lot of experience looking at manipulation as a former auditor and a cybersecurity analyst. My master's is in cyber with a concentration in digital forensics. So I can take big data sets and figure stuff out, right? Mm-hmm. So I've been looking at it for a long time. And yes, there is stress in that shorting side of the market in gold and silver. I was one of the first to cover the Chinese Shanghai market about 4 years ago. I did a presentation at Silver Symposium in Coeur d'Alene, Idaho, that JP Morgan was helping China up its game in the Shanghai for all commodities, but with a specific emphasis on gold and silver. I was one of the first to show the data reports off the Shanghai website about how there were price differentials in China and the US. And this started 3.5, 4 years ago before anybody started covering it on Twitter. But you see those price differentials between London, the US, and China. And it goes back to what I said 6 years ago at that commodities presentation I mentioned earlier, Muddy Metals and Mines virtual conference. The commodity wars are on, and we're going to have a regionalization of markets. I've said this on several people's show, including Triangle Investor and Danny's Capital Cosm, where I think we're having a bifurcation of prices. We're going to more localized, and by that I mean regionalized trade hubs. That is going to put tremendous stress and pressure on banks or other. And I don't think all the shortings by JP Morgan are the banks. They hold client accounts, and I think sovereigns have shorted it over the years. I think industry players may have done it. The banks may have done it. And I can go into this forever. I can talk about Rostin Benham, who is the acting CFTC commissioner, with a video out on YouTube at the Bug V conference admitting they stopped silver at $30 in the beginning of 2001 during Silver Squeeze 1.0 because they had to control the price. All of that stuff. Now, are they losing control? Sure. It's not quite like people expect. The one thing I want people to understand, and James Rickards backs me up on this, he posted on Twitter and I reposted it, that you cannot break the silver market through just buying a bunch of physical. Yeah, you can buy coins like this Kinesis coin, and that's great. You can stack all day long. But there are cash settlement and liquidation provisions on the COMEX to where you can't force it to default. And COMEX was not designed as a physical delivery market. It was developed first as a hedging market and then as a gambling market on futures. And there happened to be more deliveries the last few years than there have been in history, but did not force to deliver. So you hear people saying, if so many contracts stand for delivery, it'll break the COMEX. Well, no, it won't. Eventually, yes, if enough metal comes off of the registered category, goes into eligible or gets taken off the exchange in a loadout, which is the step beyond delivery. Delivery just means you take it from one person to another person. That's delivery. Loadouts where they actually take it out. Now, it all hasn't been loaded out, but a lot of it's been claimed and is sitting in COMEX vaults because those vaults service not just COMEX customers, but other customers. So that's another thing people don't understand. There's less liquid gold and silver, especially silver in the COMEX. You can't hard break it because what will happen is the U.S. government, because they're afraid of the death of the dollar, will defend gold and silver prices until the death of the dollar, and they'll do it through the COMEX. And what they'll do is they'll rustle up as much physical as they can to satisfy the market, and they'll cash settle everybody, and they'll use the printing press to do it. It doesn't mean that the COMEX can't default or can't reach like a force majeure, but I think it's going to be different than people think. I think it's going to be a gradual process and a loss of confidence, which has already been happening since 2008, 2009. It's just accelerating, and eventually people are going to leave the COMEX and put contracts elsewhere. The last bit I want to say on that, one of the videos I recently had, if you look at the bullion banks who hold the shorts, there's 4 to 8 companies hold record shorts. If you look at the COT report from the CFTC, the commitment of traders, which shows disaggregated categories of types of traders and if they're long or short, and you add that to the Office of the Comptroller, the currency report, a government office, which talks about derivative positioning, including in precious metals, and has broken precious metals derivatives out in recent years and names the banks involved, not only in precious metals derivatives, but all derivatives, mortgage, Forex, bond, so on and so forth. You realize they're all the same banks. So are the Western banks losing control? Well, according to the bank participation report at the CFTC, another piece of data, I'm throwing a lot at you, but I'm putting these pieces of data together to form the narrative. The U.S. banks have gone net long in silver for the first time since I can remember covering the market. The global banks are short. So who wants to hold the price down? Global banks. Who are global bank clients? Other global entities. Who are global entities that want cheap silver? I don't know. The entire rest of the world. Industries, sovereigns, you name it. I think the drain in U.S. silver coming through the COMEX, through the banking accounts, is for foreign banks and party and their clients. And so I think we're being drained of it. And it's led to high premiums on common products, bullion products at your store, American Eagles, all that kind of stuff. But there's still silver available. I'm buying silver at or below spot for our bullion store and for refinement or recasting into our coins and bars. So it's still available at or below spot. in big quantities for people who have that money, but you have to be a certain place in the supply chain to get it. If you're a stacker, you're going to pay probably a little bit higher prices, unless you're buying from a third party, like a friend or somebody like that, off of the internet. Be careful if you do that, by the way. Have your purity tester if you're going to do that. But even your local coin dealer, you're paying higher premiums. Most of that's because of the refinement glut. We're not quite to the silver shortage, the physical where you can't, it's unobtainium, to quote Mike Maloney, a good friend of mine. It's not unobtainium in the US yet, but we're getting there. The premiums now are just supply chain problems. What will come and what will be the last explosive leg of the gold and silver market is when the fiats collapse at or around the same time that the world has gobbled up all the free gold and silver and the mines aren't producing enough. And you're like, oh, crap. Then you get vertical limit up on the prices. Now, as we record this, silver's down 18% in a day. Gold's down 6.65% in a day, according to goldprice.org. And, those pullbacks occur in a market. Is that profit taking on the derivative markets by the big entities? Sure. Is it the end of the gold and silver market? Nope. And we're not even to the big final blow off stage. We got a long ways to go. So I want people to be patient, to use price pull. If you're stacking and you decided and you contact your financial advisor, disclaimer, but you've already decided you want to invest in gold and silver. Now is a great time because you got a big pullback in the market and there will be others. But just remember, the fundamentals haven't changed. The fiat currency, all of those failures in the coming CBDC digital currencies has not changed. That plan has not changed. We're just in sort of preliminary stages of the final blow off. What if all the stackers want? The stackers want the final blow off. And we're getting closer. We're getting really close. We're just quite there yet. So the derivative schemes, by the way, last thing I'll say, the whole world needs effective pricing on silver because industry depends on it. It's not just money anymore. So it's not just going to be the U.S. suppressing. The foreign banks are going to do it. Everybody's going to do it to grab the physical as much as they can before the fiat collapse. So it's not just U.S. banks or entities suppressing gold and silver. It's the entire world, suppressing U.S. to take U.S. And the reason they're doing that, if you look at Shanghai and the higher prices, because they're already running out of it in Shanghai. They're already, that part of the world, that 72% of the world integrated into the Belt and Road Initiative is sucking silver out as fast as it can. And the last bastion of available silver is the U.S. So we're getting real close, but we're not there yet.
Wow. I think you kind of went a little bit into my next question. So I'm going to ask it anyway, just to be on the complete side in case there's a component that we haven't covered. Is it your take that the COMEX and LBMA will continue to crack while Shanghai Exchange and China continue to collect and hold physical silver and other metals? Like I said, I think you covered it, maybe partially, maybe completely, but I thought I'd ask it for completeness sake.
I think all of these markets will continue to exist. I think there's a crisis of confidence in the Western markets, the OTC in London and the COMEX. It leads into my thought of regionalization of markets. The COMEX is not just going to disappear. It may change how much business goes through there. It may change their pricing schemes. They've changed the way that they, calculate margins to a percentage basis, maintenance margins to a percentage base, stuff like that. They're adjusting how the market's priced. And yes, a lot of the business is going to move east into Russia, China, Dubai, so on and so forth. But U.S. is not going to go away. When the British Empire failed, it wasn't like the island sank into the ocean. They're still there. The pound is still there. It's different. The economy's still there. Spain's still there. When Russia collapsed the first time, it recovered. It probably has the actual best sovereign balance sheet of any major nation in the world. Less debt than China, U.S., or anybody. And the Russians might be the smartest in terms of their fiscal spending for the government, to be honest, if you look at the numbers. So countries, their dominant periods of a country comes and goes. And when you're the dominant currency and the dominant economy, you're going to have the dominant exchanges. But see, that doesn't last forever. And JP Morgan positioning themselves over in China and all these other markets is smart because they want to trade all of them. And they want to be in any country that could be the lead dog or the second or third because it allows them to make money on transactions. That's who they are. It's who the banks and the market makers are. So these markets aren't going to dissolve completely. They're just going to change, much like the countries changed. And whoever was leading the world changed. I mean, the British used to have the best Navy. Who has the best Navy now? It's the U.S. All that's changing. China and Russia are building theirs out. It'll take years, but it'll happen. So changes are coming. I've warned people against following these popular narratives that you have these sort of hard resets and everything collapses, and on one side of the world and everything goes up. If you look at world history, it's not the way it happens. It happens over many decades. We're now at the end of that, by the way. I'm not saying we got many more decades left. I think we have maybe a few years left before it really hits a crescendo here in the US. But it takes time, and it's not linear. It's not straight up and it's not straight down. It's not 100% this and 0% this. It's a blend and a mix. And that's really what I want people to understand. But that is a blessing, because if you're new to the space, you still have time. If it were just going to be a hard collapse of COMEX, it would have happened by now. They wouldn't be able to stop it during the original silver squeeze. In 2021, on February 2nd, we would have had a stoppage of the silver market. We didn't. Why? Because they changed maintenance requirements, because they stopped the price. The regulator said we wanted to stop the price at 30, not the market. The CME group that runs the markets. Rostin Benham was a regulatory commissioner at the time who said we did this to preserve that market. So it's the narratives around it's going to crash right now, and they're having secret meetings and all this crap coming out by these AI bots that's never been proven. In fact, this collapse of the silver market on Christmas Eve never happened. So watch the information you listen to and just be careful with it and understand that these things take time. Although, and I've said this 1,000 times, but I think I'm more correct than ever, time is running out on getting into metals before the fiat collapse. I do believe that. But just know that the United States is going to exist after the fiat collapse. We're just going to be different. The markets will still be there. They'll just be different. We just won't be the dominant. We won't be the lead dog in the sled anymore. We're going to be a few rows back. And that's really the world that people, I think, need to expect and prepare for.
Yeah, that's a little scary, because the country that is in charge wants to stay in charge, and that usually leads to physical confrontation.
Kinetic wars, yes. And my father was in World War II. He landed on Normandy Beach. He was a medic, and he was a radio operator, so he was a second landing. Troops get in, capture the beach. He went in, helped clean up the mess, and was radio operating the whole time, and went into Germany. Even though he's in the Navy, they said, come on, bro, you got skills we need. And he marched all the way in Germany. My older brother was in the Vietnam War. My family has a history of joining wars, unfortunately, that we've had to have them. Not unfortunate that they served, all respect for them for serving. But those of you out there that have veterans in your family of actual wars understand how devastating this can be. And unfortunately, these go in cycles, and it's cycle for more kinetic war, which we've seen. I'm not predicting we'll go to a world war, but I would just say, and it's probably not, we don't have time to discuss this on this channel, but I have a video out just this recent Thanksgiving, but a year prior, so a year and 3 or 4 months, where I talked about my experience where I got my master's at military college and what I was told. I encourage people to go watch that. It's called, the title of the video is on the subject of World War III. And I tell you what I was told at a military college by my military friends. And we had a session talking about the coming kinetic conflicts about 10 years before it started. So I knew 10 years before it started, we were having more kinetic conflicts. Now, how the end shape of that's going to be, I'm not a military expert, but I can tell you from history, it ain't good when the dominant nation state collapses and the fiat collapses at the same time, because you have world economic issues and everybody starts shooting missiles at each other. And we're in the proxy war stage of that right now. By the way, I attended a session during my graduation week from a professor talking about proxy wars. And Ukraine's a proxy war, and so is the Middle East. From all these big nation states we've been talking about on this program, and more is coming. We just hope it doesn't get to that, the really bad stage. And I agree with you. That's something that's occurred throughout history, and hopefully we avoid, calmer heads prevail, and we avoid that this time.
Previously, you were on the board for Citizens for Sound Money, which you had mentioned, and mentioned that you stepped down from the board to work on C4SM legislation. I think that's pretty awesome. What led you to this decision? And would you be willing to let me introduce you to attorney Chris Pritt, who used to be part of the West Virginia House of Delegates and is now running for West Virginia State Senate. He introduced sound money legislation as a delegate, which met extreme resistance from the bankers and died in committee. He wants to introduce similar legislation from the West Virginia Senate. Would you be willing to let me introduce you to him and help him be successful in bringing sound money to West Virginia?
Would be happy to. Willing to talk to anybody who's doing the political thing. And just to explain my role with C4SM, when the founder, Jim Forsyth, had died, I was asked graciously to be on the board. We were friends, and I was helping them out via social media. I'd known Jim for years. Joined it for about a year and a half. I didn't think I was going to be on the board that long. Well, in the role I was, because the board members, because we were a fairly new nonprofit. I mean, been a couple of years, but still working on financing, as all nonprofits do. I got down into the weeds and did a bunch of stuff. And I have a full-time job and a side business, so I had to kind of get back to that. But I have taken roles that are I think, equally as important, but more doer type roles that fit within my available time. I'll still be hugely involved doing legislation in Texas and maybe being involved in a trade association C4SEM's building. So C4SEM, Citizens for Sound Money, is the only nonprofit, and this is key, the only nonprofit that I know, or maybe put this way, the only entity that is a nonprofit with no obvious profit motive that is there to promote sound money across the United States and legislative, education, trade association, and applications in helping people price their metals, which is coming out soon, which I shouldn't be talking about just yet. So a lot of things that C4SM is doing, and it's extremely important that people understand that Article 1, Section 10 of the Constitution says gold and silver are legal tender. And even though we have a fiat dollar and we have some what I call legislative fiat that is probably unconstitutional around that, gold and silver are still money. And through the Bill of Rights and Amendment 10, summarizing, all powers not expressly granted in the Constitution belong to the states and people. So if it didn't say federal government that you could have it, you can't have it. And there's nowhere in that Constitution that says you can make anything but gold and silver legal tender. So by working at the state level, then essentially what we're doing is bringing the argument hopefully up to a higher court to settle once and for all. The reason we're doing that is because once the fiats collapse, they're going to go into CBDCs. And once you have that, it's pretty much over. So from a standpoint of having true monetary freedom away from the government. So the way the government's role is only supposed to be in weights and measures and assuring that the commodity money is sound in and of itself. And it's not supposed to be having the relationship with the fiat currency and the Fed as currently constructed. That was not the original design. There is some legislative fiat and some other things, that's what we have now. And maybe some questionable Supreme Court interpretations of the law, creative interpretations. We want to get back to the original form of money, but bring it up modern age and have a digital equivalent that was fully audited and we know it's there to work in the modern economy, at least as a choice alongside these other options. And C4SEM is dutifully working towards that. Again, the only entity that I'm aware of that's a nonprofit with no profit motive, that's an actual registered nonprofit, multiple nonprofits and under the umbrella doing all these things. So it's vitally important. And for anybody that really wants more information, please go to citizensforsoundmoney.org. You can look it up in Google, or you can type it out and make a donation. I implore people to do that, because if you take 1 ounce of silver, it's at the time I'm looking at this, $90. It's down 20% today, but $90, but it'll go back up. Don't worry about it. You could do the $100 for 1 ounce of silver, you could do roughly the equivalent of the $100 membership, which would help out tremendously because it's a nonprofit. Myself and the other board members and executive director put our own money and time into this for free for a long time, not completely. We have some paid positions, but there's a lot of volunteerism. I've donated, 1797 US dollar coins worth $3,000. My time, my energy, my money, to that. And we can only do so much. There's only so many of us. We need public support. So again, please go to Citizens for Sound Money and consider supporting education, legislation, trade associations, and all those things we need to do to support gold and money, gold and silver as sound money in the United States. It's not just buying a stack and saying, I got a coin, I'm good. There's infrastructure, there's legal cover, there's education, there's advocacy through the trade association that needs to occur. There's infrastructure that needs to be built. And we're Citizens for Sound Money sort of at the forefront of doing that stuff.
Well, I'm glad you mentioned all that, because 3-4 months ago, plus or minus, I also joined Citizens for Sound Money while I was interviewing Daniel Diaz. So, those of you who are watching this interview, I do want you all to seriously consider donating to Citizens for Sound Money. As I understand that you have a $25 level and a $100 level, which not that bad considering what can be happening with CBDCs or its predecessor, stablecoin. You've mentioned that you are a proponent of Austrian economics. This is different than Keynesian economics. Would you care to give an explanation of the difference between both of these for us who do not know this terminology?
It'll be difficult to summarize that economic concept in a short period of time. There are entire books and curriculum on it, but I would say like this. Keynesian economics is named after John Maynard Keynes, who was more of a socialist economist who looked at classical economic theory and said, hey, what if we and I'm summarizing, what if we just print a bunch of money and we build prosperity that way and get off of these commodity monies and get off of these restraints? And they did it because it was a period of time in which the world was spending record amounts of money on all sorts of things. industrialization, eventually war. And it was the policy of many economists at the time to leave their classical economic roots, leave the Adam Smiths of the world and all those guys, and go into how do we finance big government debts. And the governments loved it, and they popularized it, and it's now taught in schools because governments around the world hire the people and sometimes write the curriculum themselves, even in the US, by the way, Department of Education, anyone. And so the free market education hasn't existed in this country really since the early 1900s, through the 1950s, 60s, when the high schools were fully taken over by the government and the curricula was taken over and watered down. Two people behind the change in the high schools was J.P. Morgan himself and Dewey of the Dewey Decimal System, the card catalog system for books. John Dewey, I believe John Dewey is his name. I read his literature, his pedagogy, if you will. He was an avowed socialist. He was out front with it. He was public with it. You can find it online very easily. And he said the only problem with Marxism was the violent revolution won't work. You have to train people to want socialism. In other words, to be serfs. And he advocated for a technocracy and through socialism, training people to be serfs. J.P. Morgan wanted a workforce that wasn't necessarily as smart as him, but would do what he wanted and build his empires. And so they got together and created the public high school system in the United States.
Wow.
If you don't believe me, go read the literature. It's out there. There are a lot of people. I think John Taylor Gatto is one that talks about it. There are others, but you can find the direct quotes in old newspapers at the time. The great thing is we still had a free press largely back then, and they were talking about it. You can find it. You can find it at your library. You can find it online. Cheryl Iserbyt's another that's talked about it. Lots of people have talked about it. So when you have government-run education, you get government educational principles, including economics and finance. And we've gotten away from sound and honest money, which is the Austrian School of Economics, probably perfectly encapsulated by Mises.org, MISES.org, and a bunch of books you can read. Guys like Hazlitt and Ludwig von Mises and many others wrote about how economics actually works. And so if I had to sum all of that into the difference between Keynesian government economics and free market economics or Austrian economics, is that Keynesian economics seeks to, what's the best way to put this? Austrian economics is a study of economics as human action, because economics is a series of millions and millions of decisions made every day. And as much as you try to central plan, people will just, if you come out with a central plan, people will change their behavior. Economics is not a data science. There's data in it, but the data is representative of the people. And I'm coming from a data and a technical background, master's degree in cyber, but also have a business background, run businesses, work for businesses. And Austrian economics is a true study of what economics is. It's decisions made by millions of people in a scarce resource world. And Keynesian economics is we're going to run economies in the aggregate and we don't care about the individual. In other words, Keynesian economics is not compatible with the Constitution. We have a constitutional republic, not a democracy, a republic which protects individuals and protects individual action and espouses small limited government. Keynesian economics is what allowed the government to go more socialist and collectivist and to rule in the aggregate and kind of screw the little guy for the benefit of government controlling money is essentially what it is. And so, I mean, that's what you're looking at. That's the difference between Keynesian economics and more classical, over time in history understood Austrian economics, which they don't teach anymore in the US or basically anywhere in the Western world. But you can get it. You can buy books, Mises.org, or you can just go to a lot of free market bookstores online and get this kind of information as well.
I've heard you mention that silver frequently is exchanged between the LBMA and the COMEX to simulate enough silver in each other to instill confidence. Mm-hmm. This seems very similar to the bank stress test, in which money is sent to a bank to help them pass a simulated run on the bank, also to instill confidence. Am I understanding this correctly?
Yeah, it is. And if you look at, it's the Western system between England and the US, which has dominated commodity pricing across the world up until recent years when like I said, you're seeing regionalization, people taking control back in other markets. And specifically to gold and silver, you've seen silver bars fly from the US to London to address their silver squeeze, during 2021. And most recently, the physical silver squeeze here in the COMEX, they were flying bars from London back to the US. So yes, they help each other out. And there are products developed between the two markets. If you read on the CME Group's website, you can see that there's integration. You can exchange, there's called an exchange for physical, EFP product, which allows you to take your futures position and exchange it for an OT position over in England. And as long as you can find a willing taker. And so there's derivative exchange, which allows, essentially what it does, the easy way to look at it is you got two different markets trying to control the market pricing. If one market gets too separated from the other, they have ways to move money back and forth. And the traders will do it willingly to earn that little bit of return. But using the traders to move that liquidity around is what's helped keep those two markets in sync for the most part for the last 50 years. And it wasn't until these foreign parties came in to call the bluff of COMEX in London, and it had to include sovereigns. There was not enough money in an individual company to do it. I mean, Apple could try, but the US government would tell them to go pound sand. But if you have national sovereigns coming in through the banks in these, in these accounts, which they're probably not disclosing that it's China, Russia, whoever, and other entities, other super large entities coming in, to break that pricing scheme. So when you talk about COMEX breaking, it's not going to be a hard physical break over the hard silver. It's not going to be that. It's going to be the fact that the rest of the world said, we're sick and tired of your crap. We're going to call you on your crap. We're going to build our own markets, and we're going to steal your silver as much as we can. And that's exactly what's happening. And now, because the rest of the world's doing that through these banking intermediaries, is my belief based on the data. I don't have 100% proof. It's my belief, my opinion about all this. I think what you're seeing is, these two governments panicking, the US and the English, the British government saying, oh crap, what do we do? And that's where you see, Trump making silver a critical mineral, investing billions of dollars into it. We talked earlier about that, and that's where you see the Western world saying, oh, we need to go back to manufacturing because we shipped all our manufacturing overseas and now they don't like us anymore and they're attacking our weak spots. And shoot, we got to go back and rebuild. This is why as a nation state, you don't want to fully globalize. You don't necessarily want the single dominant currency, because it leads to current account balances and inflation and the eventual collapse of your own economy. So be careful what you wish for, because the guys on top always come down. What goes up must come down. And we're in that stage. But I still think the markets exist. Like I said before, they're just going to exist in different format and with less confidence and less control. And that's already started. It's continuing. And the recent silver price explosion above 100 to about 121 or whatever the final number was recently, that is an indication of those commodity wars. And that's an indication of the U.S. and London not being able to bail each other out and fool everybody, and the rest of the world coming in and calling the bluff. So that's the type of default you're going to get. You're going to get a default of confidence.
I understand that you have a gold and silver business, and I think I might understand that you are minting as well. Is this correct? And would you care to go into it any further?
Well, I work for a larger company, so I ran my own coin store for a while. I've been in the industry from mining stock investor, analyst, visitor, to retail dealer, to now a retail and wholesale provider for another company. And I work for Kientz. We run KientzBullion.com, and we produce Kientz product. We're sold out of gold, but we're about to have more in the store. We're almost sold out of silver. We can't keep it in stock. But that's the good news. And we've primarily had minted in other country jurisdictions because of pricing advantages. Now those pricing advantages have flipped because the rest of the world has higher premiums than we do in gold and silver. And so the company said, well, heck, let's take advantage of the fact that we can produce here in the US. So we do have some minting and production now in the US. So we get it from multiple places in the world, and that allows us multiple supply chains. And so we're trying to rebuild our cache of precious metals for our US consumers. We just literally, due to price premiums and supply chain constraints, ran out of gold before we could produce more, but we got it coming. It's going to come in the next few weeks, trickling back in, and the advantages we have in the US market are allowing us to do that. So fortunately, because I happen to know a lot of people in the industry for being in it 16 years, I know smaller refiners that had capacity that we could use where a lot of the big ones were glutted up. And so that gives us a bit of an advantage in, building out an alternative supply chain, if you will, which we're doing and have done. And so that's really the way you got to live in this world. Going back to the lack of manufacturing capacity in the United States included refining of precious metals. And now everybody wants precious metals. The refining has got glutted up in the US. And the rest of the world ain't refining for us right now. They're refining for themselves. So it's who can refine the fastest. Because if you look at the supply chain, yeah, you can get some off the COMEX, but you got to get a lot through scrap and silver and gold and old products being remelted or just bought. And so the supply chain is not just the refining of the 3/9 silver bars off of COMEX or from the Swiss refineries. It's really, now it's gotten down to what silver is available in the retail market. And can you refine that? And that's what's caused a refinery glut, is all the U.S. retail selling, refiners getting maxed, and then us having to build alternative supply chains. So I don't want to get too far into that and explain company strategy, but that's essentially what's occurring. And so some of us guys are a little bit more nimble, can operate in the space, where some of the bigger providers are really struggling right now to get gold and silver in the store. I mean, they just really are.
Well, those are all the questions I have for you right now. Before we bring this program to a close, would you care to tell the viewers more about the Freedom Report and its links? And I'll put the links in the description below for everything that you mentioned, and your involvement for Citizens for Sound Money and your gold and silver business, which I think you've just covered.
So, I mean, Citizens for Sound Money and Kinesis I covered. If you want to find the Freedom Report, by the way, we used to be called Gold Silver Pros when I first started doing this, 2019. Been doing social media for about 6 years. Overall, writing for about 16, although I have a Substack. I'm struggling to get it going because of all the other stuff I do. But I'll go back to writing. So we have a Substack now under the Freedom Report. We rebranded about 2 years ago because I didn't want to just cover gold and silver. I wanted to cover more going on in the world and how that's going to affect gold and silver in the economy. So we expanded content a tad, which has been good for us. So we're now called the Freedom Report on Substack, Twitter, and YouTube. Just look up the Freedom Report, my first and last name. You'll find me very easily, or you can just Google me. You'll find me a bunch of ways. And Substack is a labor of love and a work in progress. But for those that love to follow my writings, because I started as a writer, I'm going to bring that back, and we're slowly introducing my writings back. So you can just find us under the Freedom Report under those 3 outlets.
Thank you, everyone, for coming to this interview with my guest, Rob Kientz. Rob, I had a wonderful time. You're a wealth of knowledge and a lot of fun. I would love to have you back on the program again if you would be willing to come.
Would love to, and thank you so much for the opportunity to address your audience.
So, good night, everyone.